Welcome. In this video, should you buy Zbcn or XLM to have $100,000? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
But first, let's analyze Zbcn.
A descending trend structure observed on a chart is one of the most significant technical analysis indicators that reflect the overall perception and behavior of investors in the market. A downtrend indicates that prices are exhibiting a downward trajectory over time, typically meaning that selling pressure outweighs buying pressure in the market. However, once this descending trend line is broken, meaning the price moves above this trend line, it may indicate that the character of the market is starting to shift. Such a breakout is considered highly positive in technical analysis and can potentially signal the beginning of a new upward movement. Let's now thoroughly examine what this structure means, the signals it carries for investors, and the detailed aspects of such a formation. First, it's essential to understand what a descending trend line is and how it is drawn. A descending trend line is formed by connecting a series of lower highs. In other words, if each price rally ends below the previous peak and this pattern repeats, then we are in a downtrend. This line is perceived as a resistance line by investors. Every time the price approaches this line, sellers step in and push the price back down. As long as this line remains unbroken, the market is generally considered to be in a bearish phase. However, when the price breaks this descending trend line, rising above it, it suggests that this structure is ending and a new market trend may be beginning. Typically, trading volume increases during such a breakout. Since many technical analysts and algorithms interpret this as a buying opportunity, new buyers enter the market. A rise in trading volume is a strong indicator that the breakout is legitimate and not a false move. Trendline breakouts on higher time frames are especially significant, as they can signal more stable and longer-term upward trends. The breaking of a descending trend line is not only important from a technical standpoint, but also from a psychological perspective. This breakout represents a shift in market sentiment. Sellers who were previously putting downward pressure on the price begin to retreat, while buyers gain confidence and enter the market. This quickly creates upward pressure on the price and may potentially result in a reversal of the trend. In other words, the breakout of a downtrend is the first step in transitioning from a bearish to a bullish market, presenting a new window of opportunity for investors. In this context, a descending trendline breakout is generally analyzed in three stages: breakout, retest, and confirmation. In the first stage, the price breaks above the trend line. At this point, risk-tolerant investors may enter long positions. The second stage, known as the retest, is where the price pulls back to the broken trend line to test it as a new support level. This stage is crucial as it confirms whether the trend line has truly been broken. If the price successfully tests the trend line as support and bounces back upward, this is considered a successful retest in technical analysis and gives a strong buy signal. The third stage is confirmation. If, after the retest, the price begins rising again and starts forming higher lows and higher highs, a new uptrend is considered to have started. Moreover, after the break of a descending trend line, the price often has increased potential to move toward the next resistance levels. These resistance zones are areas where the price previously paused or reversed, and often coincide with technical indicators such as Fibonacci retracement levels, horizontal resistance zones, or moving averages. Therefore, after a breakout, investors should pay close attention to these levels as they may result in short-term corrections. Investors analyzing this technical structure can adjust their strategies accordingly. For example, more aggressive investors may buy immediately at the breakout, while more cautious investors may wait for the retest phase to be completed. Some investors may even prefer to wait for the formation of higher highs and higher lows to confirm the beginning of the new uptrend. In any case, since the breakout of a descending trend line signals a structural shift, it's crucial for investors to conduct careful analysis and stick to their trading plans. In conclusion, the upward breakout of a descending trend line is a highly positive structure in technical analysis that signals the potential for a bullish reversal. This breakout shows that sellers are weakening while buyers are stepping in more aggressively. When confirmed by a successful retest, it can present high-probability buying opportunities for investors. However, like any technical pattern, this structure must be evaluated with caution. But of course, we can't make decisions based on trends alone. Let's take a look at other metrics as well. Stay tuned.
The consistent formation of higher lows and higher highs on a price chart is a highly positive sign in technical analysis and often indicates that a strong uptrend is underway. This structure shows that investors and market participants are increasingly willing to buy at higher prices, suggesting that buyers dominate the market and selling pressure is gradually diminishing. These patterns generate strong signals, not only in the short term, but also in the medium and long term, pointing to the continuation of the bullish trend. In particular, the higher low formation indicates that the price is recovering without falling below previous lows. This means market participants are now stepping in to buy at higher levels, and previous support zones are no longer being breached. In other words, the market is keeping pullbacks shallow and continuing upward movement without breaking below previous lows. This demonstrates increasing confidence in the market, weakening sellers and strengthening buyers. Meanwhile, the higher high formation shows that each new rally is creating higher peaks than the previous one. This means buyers are not only defending support levels, but are also breaking through resistance zones and pushing the price higher, indicating strong overall market momentum. Especially when these two patterns, higher lows and higher highs, occur together, it confirms a bullish market structure. And as long as this pattern remains intact, the uptrend is expected to continue from a technical analysis standpoint. If these patterns repeat multiple times on a chart, they provide strong reassurance to investors. This is based on the technical analysis principle that the trend tends to continue. As long as the structure remains unbroken, investors tend to hold their positions and look for new buying opportunities, which further drives prices higher. The repeated appearance of the higher low formation shows that buyers view every dip as a buying opportunity and that confidence in the market remains high. When such a pattern forms, many technical traders interpret it positively and shape their positions accordingly. For example, many investors place stop-loss orders near the higher low area and set profit targets in anticipation of the next higher high. Thus, market structure becomes a reflection of investor psychology and expectations. These upward patterns on the chart are not just lines, they are the natural result of supply and demand, investor sentiment, and price action. Additionally, in markets where this type of pattern exists, buying opportunities are often brief. Since each new low is formed at a higher level, price pullbacks are viewed as buying opportunities. This usually reflects a market environment where the buy the dip strategy is effective. When a correction occurs, investors quickly enter positions, and as the price continues to rise, more investors join the trend, adding momentum to the movement. Higher lows and higher highs within an uptrend also produce similar outcomes on higher time frames. For instance, if this structure is visible on a 1-hour chart, it often begins to appear on 4-hour or daily charts as well. This encourages investors to take not just short-term, but also medium and long-term positions. As a result, these patterns start to generate a chain of positive signals, and the uptrend gains support from an increasingly larger group of investors. The sustainability of this technical pattern largely depends on whether the trend continues. If the price eventually breaks the higher low structure and forms a lower low, this may indicate that the uptrend is weakening or coming to an end. Therefore, investors closely monitor low points in such trends. As long as the price does not fall below previous lows, the strength and health of the trend are confirmed. At this stage, new entries and target levels can be determined and strategies adjusted. The emergence of these patterns is also directly influenced by news flow, project announcements, investor interest, and the overall market climate. If the market is in a generally positive phase, such higher low and higher high structures appear more frequently and become more sustainable. In particular, during bull markets, the continuation of these patterns strengthens investors' confidence. This confidence turns even small declines into buying opportunities, allowing the price to continue its upward movement.
For an investor considering making an investment with a significant capital, such as $100,000, deciding between Zbcn and XLM deserves to be evaluated not only based on short-term price movements, but also on their long-term potential. At this point, analyzing both assets in detail, examining the fundamental differences between them, and comparing their potential for capital growth can help the investor make a strategic decision. First of all, XLM, or Stellar Lumens, is a project that has been in the market since 2014. It has a strong ecosystem and has established numerous partnerships with banks and payment providers worldwide. XLM aims to make cross-border payments faster, cheaper, and more secure. While Stellar operates similarly to Ripple, it is known for placing greater emphasis on decentralization. XLM's current market capitalization is approximately $12.8 billion, making it one of the larger cryptocurrencies and a highly liquid asset. However, an important question for investors is this: how many times can an asset of this size realistically increase in value in the short or medium term? For instance, for XLM's price to double, its market cap would need to rise from $12.8 billion to around $25.6 billion. This would require a substantial inflow of capital. Such a capital inflow would depend not only on technical analysis, but also on macroeconomic developments, regulations, ecosystem advancements, and strong global market interest. In large-scale projects like this, significant growth often takes time. Therefore, even doubling a $100,000 investment in XLM could take considerable time, and in certain market conditions, this goal might not even be achievable. On the other hand, in developing projects with relatively low market caps like Zbcn, the situation is quite different. Since these projects are still in early stages, their potential returns can be much higher. For example, considering Zbcn's currently low market capitalization, only a limited capital inflow might be sufficient for it to increase in value tenfold. The Zbcn team regularly shares roadmaps, works on technical development, and maintains continuous communication with the community to build investor confidence. If these efforts continue and the project continues to prove itself in the market, it could offer significantly higher returns to its investors in a short period of time. The fact that Zbcn has not yet been listed on major centralized exchanges is also seen as an advantage. In such projects, centralized exchange listings often result in major price movements. If a token like Zbcn gets listed on major exchanges such as Binance, Coinbase, or Kraken in the future, it would not only increase accessibility, but also attract institutional investors and provide upward price momentum. Another important difference is community support. In established projects like XLM, the community has already reached a certain level of saturation. However, in projects like Zbcn, the community is still growing. This growth is supported not only by social media engagement, but also by the expansion of use cases, increasing partnerships, and technological innovations. Therefore, it would be more realistic to view Zbcn not just as a low-priced altcoin, but as a project with long-term growth potential. For a $100,000 investment, the investor must balance risk and return. If the goal is a safer, slower, and less risky growth, XLM might be a logical choice. However, in this case, the investor must be patient to double their investment and accept lower volatility. Conversely, if the investor is more willing to take risks and invests in an early-stage project like Zbcn, the potential reward could be significantly greater. Zbcn's consistent project updates, technological development, and transparent communication with the community suggest that this token has the potential to evolve from being merely a speculative asset into a long-term investment vehicle. In such projects, what matters is not just how low the price is, but also the team's vision, commitment to the roadmap, and mastery of the technology. From this perspective, Zbcn stands out as one of the promising projects in the crypto world. It is also important to remember that Zbcn is still trading underground in terms of price and has not yet been fully discovered by large investors. This implies that early investors may achieve greater returns. While such projects carry risk, if risk is managed properly, they can offer much more attractive returns compared to larger projects like XLM. If the investor's ultimate goal is to multiply their $100,000 investment several times and do so in a relatively short period, projects like Zbcn with low-cap tokens are more suitable. These low-cap tokens can move faster in price and potentially offer larger profit opportunities. Moreover, Zbcn is not just a hopeful project. It is one with an active development process, a clear roadmap, and a growing community. That said, rather than putting the entire investment into a single asset, a balanced portfolio distribution between Zbcn and XLM could also be considered. For example, a 70% Zbcn and 30% XLM allocation would offer the investor a high return potential in a growth-oriented project, while also mitigating risk with a larger, more established project. This allocation allows the investor to benefit from stable growth through XLM and capitalize on Zbcn's potential price surges. In conclusion, Zbcn's continued progress, strong team, technological advancements, and strong community engagement suggest that this token has the potential to surpass even popular projects like Bonk in the future. If this scenario materializes, Zbcn could increase not just 2x or 3x, but 10x or more in value. In such a case, a $100,000 investment could rise to $1 million. For investors seeking high return opportunities, Zbcn represents a risky but potentially highly rewarding alternative.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.